This is Horizon's Middle East and Africa. Our top stories this morning. Another day, another tariff rollback. President Trump pauses levies on all Canadian and Mexican goods compliant with the USMCA trade deal, making 40 to 50% of imports now exempt. Stocks fall in Asia as investors navigate the uncertainty. It was almost unanimous. 26 EU nations back a declaration of support for Ukraine, pledging continued aid and security guarantees. Hungary's Viktor Orban refuses to sign. Plus, Bitcoin drops after the White House crypto czar says the US government won't use taxpayer money to fund its strategic stockpile. Well, it's just gone 8 a.m. across the Emirates. It's 3 p.m. Friday afternoon here in Sydney. I'm Paul Allen in for Jemana Beseche. Let's take a look at how futures are tracking for the US. We're seeing a little bit of positivity for S&P futures at the moment after what was a pretty rough session for US stocks. All of the major indexes were weaker on the day. The Nasdaq seeing the most of the selling. Also seeing a fairly weak US dollar. It's on its longest losing streak right now since September. One of the major beneficiaries of that is the euro, now up at 108. It wasn't all that long ago we were talking about parity, but the euro's put on 4% in the past couple of days, and this even as the ECB eases rates, signalling though that a pause may now be on the cards, offering support to the European currency. Oil prices, meanwhile, just holding on below $70 a barrel for Brent. Oil's also heading for its biggest weekly drop since October on tariff uncertainty. Gold, though, softening a little bit despite all the volatility, just above 2,900 an ounce. And on the topic of gold, let's take a look at gold imports heading into the US. Well, they've been on an absolute tear. $40 billion worth of gold going into the US in January. That is double what we saw in December. And December itself was also easily one of the strongest months that we've seen for gold imports into the US since 2016. So a real sign there of some of the upheaval, volatility, uncertainty that's going on. And on that topic, let's check in on how markets in Asia are dealing with it all. Avril Hong's in our Singapore studio. Avril.
Yeah, I think it's kind of mixed in the way that they're dealing with this. I mean, we're coming off this week with still no long-term clarity when it comes to trade policy for the US and Canada, Mexico, to a certain extent China. So the region's benchmark, after 2 sessions of gains, it's lower today. The declines being led by the Nikkei. We're also seeing the losses being exacerbated by the yen strength as it moves dollar-yen below the 148 level. Of course, this is after the biggest labor union in the country demanded these wage hikes that support the case for rate hikes. We're also keeping an eye on China, of course, after that rally just a day ago on tech. Today, we're still seeing entering the lunch break, the Hang Seng Tech, with gains, despite earlier the Chinese indices kind of treading water. We did get some policy support in a way. I guess some of these top economic chiefs talk about how there's ample policy room to deal with the trade war. And of course, today, trade data that shows it's still looking pretty anemic, but investors seem to be brushing that off for now, at least. Paul.
All right, thanks, Avril. Avril Hong there in Singapore. Well, President Trump is pausing tariffs on Mexican and Canadian goods that are covered by the North American Trade Agreement, of course known as USMCA. That pause until April the 2nd. And that's also when he's expected to unveil plans for global reciprocal duties.
Most of the tariffs go in April the 2nd. Right now we have some temporary ones and small ones on relatively small, although it's a lot of money. Having to do with Mexico and Canada. But the predominant tariffs will go, they'll be reciprocal in nature.
All right, for more, let's bring in Bloomberg Asia senior editor Bill Ferry. So, Bill, the tariffs are on, then they're off again. They're delayed. It is getting kind of hard to keep up. What's the latest here, and what's the risk we could see another reversal in the coming days?
It seems like every day we're getting some sort of a change in the new tariff regime from the Trump administration. The latest being that a large number of these tariffs that were set to go in on Canada and Mexico earlier this week are now put off for another basically 30 days until April 2nd. That's also the date when a lot of the reciprocal tariffs that the administration has promised on countries around the world are set to go in. It's a bit of a reprieve for both Canada and Mexico, although the Trump administration has been quick to point out that more than 60% of the U.S. imports from Canada will still be subject to some of the new tariffs. And then he made a point of saying that the auto companies, who were really some of the loudest voices pushing back on these 25% tariffs, he said the auto companies will not get another reprieve. So that basically leaves them more or less 1 month to try to find a way to either make investments or make some kind of announcements that convince the administration that they're doing something that the Trump administration would like to see. It has been a lot of whiplash over the course of this week, and I would expect we'll be seeing more of that in the coming weeks and in early April as well.
Yeah, and the response to the tariffs have not really been consistent either. We've seen Canada levy reciprocal tariffs, Mexico, on the other hand, kind of holding back. Which approach has been more fruitful?
Well, I think the U.S. administration has had a better relationship so far with Mexico's new president, Claudia Sheinbaum. She has kind of avoided some of the more direct personal attacks that have kind of characterized Justin Trudeau and Donald Trump's relationship in this so far. Trudeau saying that the $20 billion or so of Canadian tariffs on U.S. imports will remain in place. His economy minister calling the back and forth over tariffs a psychodrama that the country wants to get over. But Canada is going to hold off on some of the more severe tariffs that were set to come in place later this month. We'll have to see what happens in April and whether this situation escalates or whether all the sides can find a way to step back.
All right, Bloomberg's Bill Ferry's there. Thank you. More on the market reaction. Let's get to Anita Krishna Gupta, equity strategist at Emirates NBD. Anita, it's obviously an environment that's somewhat difficult to predict. In that respect, I understand that you're overweight government bonds, but you're also marginally overweight equities. So can you give us a description of what your risk appetite's like at the moment?
Good morning, Paul. I think you used the key word. It's uncertainty. So we are a little bit on the safer side, being overweight government bond. That's a little bit defensive. We are still slightly overweight developed market equities. That's how we began the beginning of the year. That's how we've continued. So in terms of looking at our risk appetite, I think we are watching what's happening in terms of trade tariffs, in terms of policy, in terms of global growth. So growth uncertainty is what has caused the recent market sell-off. But as we stand, global equities are still up 2% year to date. We've still got China that's up. We've got a great number of countries that have begun performing. So I think the key word here in terms of our risk appetite is being diversified. So we have a very robust asset allocation framework. And I think that's what's really working well for us this year, the fact that across our profiles, we are adequately exposed to the US, we are exposed to China in terms of equity exposure, we continue to be exposed to the GCC. So it's a mix of countries that are flatlined this year and a mix of countries that are performing. Definitely, earnings growth numbers are going up for some economies, they're coming down for some. US, of course, a lot depends on the tariffs impact on EPS at this point.
Well, in terms of China, we just had some rather confronting trade numbers out. Exports for February, 2.3%. That was less than half of what was expected, and imports fell into contraction. Do you see this as perhaps being a taste of things to come in the coming months in this uncertain trade environment? And are some of the commitments that have been made by the MPC this week going to be enough to really spur that domestic consumption in China?
The MPC is absolutely completely focused on domestic demand. That's been their mandate for some time. Looking at the MPC's growth target of 5% for GDP, that continues. That's a positive for the China market. Of course, the biggest catalyst for the China market has been the DeepSeek announcement, along with Alibaba's recent similar announcement of an AI model. Now, post the announcement of these AI models, we saw that in the US, US stocks were up 50%. China stocks are already up 20%, post the announcement of DeepSeek. Coming back to trade numbers, now while it's at 2.4% in terms of Jan-Feb figures in terms of exports growth, I think that's still a very positive number. It's also to be kept relative to the large deficit that the US has seen in trade. So you've got China, which has still got growth coming in terms of exports. We've also got it looking at the processed in terms of what's assembled and manufactured in China. That number grew 10%. So that's also relevant. So I think the China export data is positive. It's lower than last year in terms of growth, but still up there. I think what I would be more worried about is the large Jan deficit in terms of, in the US, where we have seen companies stocking up on goods prior to tariffs getting implemented.
Mm-hmm. And how do you see the tariff story impacting inflation in the US? Do you see it remaining somewhat sticky, and do you have any concerns about growth?
Absolutely yes to both. Do see it impacting inflation. Firstly, I mean, if you're looking at what economists are coming out with, it's about a 0.5% increase, whether it is to CPI or to PCE inflation. At the same point, we are going to have a slower growth. We have seen a number of economists bring down growth numbers for the US already. Now, looking at both these factors, that also brings into account the Fed possibly cutting rates. Right now, the estimate is for 3 rate cuts this year. That's gone up. So that should, again, bring down borrowing costs. Borrowing costs for corporates are extremely important when we are looking at EPS numbers. Because when we are analyzing the EPS, which is roughly about a $30 increase in EPS expected for the S&P 500 in 2025, 10% growth over last year, and you see maybe a $10 impact from tariffs, input costs, then you see, a higher, inflationary impact on input costs for corporates. So that's really important in terms of corporate earnings, which again impacts growth. So yes, we are worried about growth.
All right, Anita Krishna Gupta, we're out of time, unfortunately, but thanks for joining us. Anita is equity strategist at Emirates NBD. Thanks so much for your time. Still to come, we're going to speak to the founder of Nabta Health about the challenges in fundraising for health tech startups. Up next, though, Ukraine and US officials are going to meet in Saudi next week to discuss ceasefire in the Russia-Ukraine war. We'll have details of that next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Paul Allen. Now for a look at some of the other stories that we're following. SpaceX has lost its second Starship rocket in less than 2 months. The rocket spun out of control before appearing to break apart during its 8th test flight. The rocket split apart as planned. It was a scheduled destruction, but the spacecraft, the rocket separated as planned, but the spacecraft did begin tumbling, the upper section that is, losing contact with mission control about 8 minutes into the flight. The Starship is key to SpaceX CEO Elon Musk's dream of sending humans and cargo to the moon and Mars. In other space news, Intuitive Machines says it believes its second moon lander may be in the wrong orientation, repeating a similar issue last year when its first craft touched down lopsided. The company says it couldn't confirm the status of the latest lander launched into space on February 26th and revealed later that it was likely not in the right position on the moon. Bitcoin fell after US crypto czar David Sacks indicated the US government won't use taxpayer money to fund a strategic stockpile of the digital asset ordered by Donald Trump. The US president has signed a long-awaited executive order to set up the strategic crypto reserve to be capitalized with Bitcoin already owned by the federal government. In a post on X, Sacks also mentioned a separate stockpile containing other digital assets. And Bloomberg Technology will be speaking to crypto czar David Sacks later on today. You can catch that at 8 p.m. Dubai time, and that's 4 p.m. in London. Well, EU leaders have backed a new military spending plan at the Ukraine summit after decades of hesitation. And this is after US President Trump paused military aid to Ukraine in their war against Russia. Meanwhile, the US has confirmed that officials will meet with their Ukrainian counterparts in Saudi Arabia on Monday.
I think it'll be a good meeting. I really do believe that. Hopefully that'll be a good signal to the Russians, because they have been proactive too in wanting to get something done here. And I think that's what the president, that's who he is. He's a peace through strength president. The best wars are the wars that never have to get fought. And so if we can solve this and not fight anymore and save lives, that's the aim of President Trump.
Joining me now is Tony Halpin, who leads Bloomberg's Russia economy and government coverage. So, Tony, what are European leaders committing to do on defence and Ukraine?
Good morning, Paul. Yes, they met yesterday and committed basically to spending hundreds of billions of euros on rearming themselves, on rebuilding their defence industries, and ensuring that they can protect the continent against what they view as long-term Russian aggression. And in addition to that, they offered support for Ukraine, not only to continue aid to Ukraine, but to provide security guarantees if a ceasefire is worked out. It was notable, though, that Hungary's Viktor Orban dissented from much of this. And one of the things that the EU was hoping to do to provide an emergency package of another 20 billion euros of defence aid wasn't actually mentioned in the final communique. So there are difficulties there in maintaining unity on this issue.
Well, President Trump has halted some military aid. What's the plan here? Is it a gambit to get Ukraine to the table?
Yes, he's been ramping up pressure quite considerably on Ukraine for two reasons, really, because he wants to secure this minerals deal to exploit natural resources in Ukraine, and also because he thinks that this is the way to kickstart negotiations by getting Ukraine, as he puts it, to come to the table and agree a ceasefire. But it's not very clear that Ukraine's opposed to a ceasefire, it has to be said, and one of the difficulties that many in Ukraine perceive is that there isn't the same level of pressure being applied to Russia. And as Russia was the aggressor here, it's very difficult to agree to a ceasefire if the other side doesn't also agree to stop fighting.
All right, Tony Halpin, who leads Bloomberg's Russia economy and government coverage. Thank you. Still to come, Israel has changed its defence policy after the Hamas attack in October 2023. The details of what it involves up next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Paul Allen. Israel says it has changed its defence policy after the Hamas attack in October 2023. Under the new policy, military deterrence now outweighs assessments of enemy capability and intent. Joining us now is Danelee Krishna, Bloomberg's UAE bureau chief. So, Dana, what does Israel's new defence policy involve?
Yes, good morning. Israel's strategy there has definitely changed, and we see that in troops stationed in Lebanon, further deeper into Syria, and of course in the West Bank, how they're dealing with the West Bank and in Gaza. The strategy rests on they won't allow any groups that they deem radical to be on the border, to be close to the settlements. And this has become more evident after President Trump took office because he has freed weapons and ammunitions needed for Israel, and they were held up for Israel during the previous administration under Biden. And of course, the previous administration has held up these weapons out of fear of a regional war and in an attempt to kind of prevent Israel from taking further steps or from implementing this strategy, I would say. But this is also a risky policy. It emboldens its adversaries in Iran and the proxies, and of course also emboldens this idea that you need so-called resistance groups against Israel in order to liberate occupied land. Take the example of Lebanon. We see that Israeli troops are still stationed inside for 5 posts overlooking South Lebanon. This is, of course, adds a lot of pressure on this new government, this U.S.-backed president and the Saudi-backed president and government, because you have to take out this theory from the hands of Hezbollah. And Hezbollah will use this argument to say, see, we can't trust Israel and you cannot deal with it. You couldn't liberate our land. So now the only option you have is a resistance group. This policy mostly also relies on deterrence, right? And after the failures that were admitted by several security agencies in Israel, this is now becoming more important than ever.
Well, let's talk about the reconstruction plan for Gaza as well. The US saying that Egypt's plan doesn't really meet the Trump administration's expectations. So what is the US looking for?
Exactly, which is not very clear, right? We heard the comments yesterday, and we're not sure what exactly were they expecting out of the Arabs. I mean, the Arabs really are in a tough position. They cannot compromise on what they have been saying for the past several decades, right? We need a two-state solution for this. Trump's plan rests on the idea of expelling all Palestinians and then building a so-called Riviera of the Middle East, kind of like a Dubai, for example, and then having the U.S. take full control of it. This is not going to pass for the Arabs, especially the likes of Saudi Arabia, the UAE, who have been saying this over and over again, that this won't pass. And so I think the issue with the Arab plan was that they didn't really explicitly say what they're going to do with Hamas. And this is the sticking point and something of a red line for Israel. Israel does not want Hamas to have any kind of ruling presence in Gaza or in any future Palestinian state, I would say, although right now they don't want a Palestinian state. But Saudi Arabia's this led plan really just is looking at reconstruction, is looking at bringing some sort of an authority, a joint committee to rule over Gaza as they carry out the reconstruction. But again, the sticking point here, and something that Israel didn't see in the plan, is what are you going to do with Hamas?
All right, Anita Krishna, Bloomberg's UAE Bureau Chief, thanks so much for joining us. Let's take a look at some of the other stories that we're following. Dozens of people have been killed in Syria after armed men affiliated with the previous regime carried out surprise attacks on the port of Latakia and other Mediterranean areas. The state-run news agency says the pre-planned offensive singled out multiple security sites in the area, damaging government premises as well as public and private property. 48 people are reported to have been killed. The UK has removed the Syrian Central Bank and 23 other entities from a list of sanctioned institutions, a recognition of the new country's administration. The country's new administration. The majority of those listed are banks and energy companies, although flagship carrier Syrian Air is also included. Assets will no longer be frozen and trading with them is now permitted. Still to come, Chinese Foreign Minister Wang Yi says Beijing will act as a force for stability as US President Donald Trump's tariffs shake up the global economy. That story next. This is Bloomberg. This is Horizon's Middle East and Africa. Our top stories this morning. Another day, another tariff rollback. President Trump pauses levies on all Canadian and Mexican goods compliant with the USMCA trade deal, making 40 to 50% of imports now exempt. Stocks fall in Asia as investors navigate the uncertainty. And it was almost unanimous, 26 EU nations backing a declaration of support for Ukraine, pledging continued aid and security guarantees. Hungary's Viktor Orban refusing to sign. Plus, Bitcoin dropping after White House crypto czar says the US government won't use taxpayer money to fund its strategic stockpile. It's just gone 8:30 a.m. Friday morning across the Emirates. It's 3:30 p.m. Friday afternoon here in Sydney. I'm Paul Allen in for Jemana Baseche. Let's take a look at how markets are tracking at the moment. We're seeing S&P futures just walking back a little bit, now just higher by, 16 points there. We will be getting some data out of the US later. Non-farm payrolls, they're expected to have increased 160,000 last month, up from 143,000 in January. We'll be hearing from Jay Powell as well. The US dollar's been pretty weak of late. It's in fact on its longest losing streak since September. Key beneficiary of that has been the euro, up 4% in the past couple of days, and this is as the ECB signals a pause after its latest round of easing, although traders are pricing in another 43 basis points of easing easing for later on this year. The oil price, Brent just holding on below $70 a barrel. The gold price as well softening a little despite the uncertainty, $2,906 an ounce. On the subject of gold, just take a look at this chart. It's quite confronting. Gold imports into the US surging $40 billion in January, and that's almost double what we saw in December. And December itself was easily the strongest month of gold imports that we'd seen into the US since way back in 2016. So clearly a strong appetite for gold in the US against this backdrop of uncertainty. Well, let's check in on how markets in Asia are faring. Avril Hong's in our Singapore studio. Avril.
Yeah, this backdrop of uncertainty also playing out in Asia stocks. Regions benchmark still headed for gains and a bit of an outlier in Chinese stocks. But I thought I'd also rake through what we're seeing in FX today, because it is, if you look at the Bloomberg dollar index, headed for, I think, its worst weekly declines in about 2 years. Some of this has to do with the surge in the euro this week, but also to do with these concerns about US growth momentum amid tariff uncertainty. And it's also playing out in Asia currencies today. So the Indonesian rupiah, the biggest loser. Going the other direction, the Japanese yen. Some of this is a domestic driver, of course. We heard from the biggest labor union in the country. They are demanding the biggest wage hikes since 1993, so supporting the case for more rate hike or BOJ tightening. Keeping an eye on dollar China as well. Renminbi moving sideways today. Keep in mind we had trade data, as you know, Paul, and it showed exports rising less than expected. And this is defying some expectations that we were going to see it benefit from front loading. So not a good sign in the face of external pressure. Paul.
All right, Avril Hong in Singapore. Thank you. Well, Chinese Foreign Minister Wang Yi is presenting the country as a force for stability in a changing and turbulent world, vowing to defend global fairness and world peace.
New China stands firm on the side of international justice and resolutely opposes power politics and hegemony. History should move forward, not backward. A big country should honor its international obligations and fulfill its due responsibilities. It should not put selfish interests before principles, still less wield its power to bully the weak.
Well, let's bring in Bloomberg's China correspondent Minmin Lo in Beijing. And Minmin, that was a lengthy briefing from Wang Yi. Took a lot of questions as well from both Chinese and foreign media. What were some of the highlights?
Yeah, it was a wide-ranging interview covering China's relations with the world, and right off the bat, Wang Yi had positioned China as this global force for stability, in stark contrast to President Trump's foreign policy, which has been marked by unpredictability and the upending of traditional American institutions. Wang Yi touting the friend that President Xi has, saying that several overseas trips had been planned for this year. That sparked some speculation that maybe Xi could visit Europe to commemorate ties there in an effort to court European allies to act as a buffer between US and China. And certainly Trump's abandonment of Ukraine provided an opening for that. Have a listen to what Wang Yi had said about the Ukraine war.
China is ready to work with the international community in light of the wills of the parties to the conflict to continue to play a constructive role in resolving the crisis and realizing lasting peace.
Wang Yi said that China's relations with Russia does not change regardless of the international situation. He called the Ukraine war a crisis. He supports peace talks, but he said the security of one country should not be coming at the expense of another. And this reflects China's long-standing support of Russia's stance that this invasion, the root cause of it is because of the expansion of NATO that is coming towards the doorstep of Russia, threatening Russia's security. Now, when it comes to US-China relations, Wang Yi had once again said that China opposes hegemony. He also said that friends should be permanent, and that is a veiled swipe at the US for pulling out of the Paris Climate Agreement, pulling out of the WHO, and he also said that Asia should not be the arena for great power rivalry, with a warning to the Philippines to not be manipulated. Of course, US and the Philippines have very close ties and a defense agreement there. Taiwan Taiwan, of course, also in focus. Nothing new there. Wang Yi repeating China's stance on Taiwan, the red line there, supporting espousing the one China principle when opposing those separatist forces. Interesting, though, that when it comes to Europe, Wang Yi had a more conciliatory tone, saying that both sides have the wisdom to settle their existing differences. Again, China attempting to court Europe there as a potential market for Chinese exports amid this rise of tariff threats from the U.S.
Min Min, just quickly, we had some rather surprising trade data out of China a moment ago. So much for front loading. Exports grew a lot less than expected and imports contracted. What's going on and what's the plan to deal with it?
Yeah, both data points, the import and export data, were very disappointing. Exports coming in at 2.3% versus a 5.9% estimates, and imports, big decline there, 8.4% contraction compared to estimates of a 1% rise. So it shows that both exporters and importers are perhaps putting things on hold as they try to wade through these uncertainties as the tariffs are being imposed, countermeasures are being implemented, and of course that big drop in imports suggesting that domestic consumption, the appetite for that is very, very weak, which means that it's crucial that the government double down on its effort to boost domestic consumption, which was what the press briefing yesterday by the economic chiefs had promised. The government signaling that they still have ample policy tool space to navigate any challenges to the external and internal environment.
All right, Bloomberg's China correspondent Min Min Lo in Beijing. Thank you. Well, the UAE is the health tech startup capital of the Middle East North Africa region, excluding Israel. And that is, of course, that is according to research from Lucidity Insights, which also shows that tech companies related to health have raised more than $460 million in 2024. Well, joining us now is one of the few female startup founders in the GCC, Sophie Smith, founder of Nabta Health. Sophie, thanks for joining us today. I do understand you're getting close to closing out your Series A fundraising. That's supposed to happen this year. How much are you hoping to raise, and what's the plan for deploying that capital?
So we're raising $7.5 million pre-Series A at the moment. The hope is to consolidate our footprint here in the UAE and then to build on the research that we've been doing in Saudi through our partnership with Princess Noor University and start commercializing there.
Have you been encountering any challenges in fundraising?
So Nabta was founded with the mission of empowering women in the Middle East and Africa to effectively manage their health. Today, we operate across 3 verticals: health, education, and research, with a unique hybrid model of care that uses an augmented intelligence, combining patient, clinician, and artificial intelligence to take all of that knowledge that was previously held within specialties and used to treat disease in a very provider-led way and reorient it around the individual based on their age, their stage, and their goals. In terms of challenges, we were one of a handful of companies that spent a substantial amount of time in R&D here in the region, a total of 6 years from 2017 to 2023. And at the time that we founded Nabta, there wasn't a huge amount of funding available for research and development here, and that was perhaps our first challenge from a fundraising perspective. Today, there are still only a handful of specialized health technology venture capital funds. TVM Capital is one, Hikma Ventures is another, and that's a second challenge. And then perhaps the third challenge is the fact that in general, there is less capital available, not just in the region, but globally, both for women's health, that accounts for only 2% of health care funding globally, and for female-founded startups. In the MENA region, just 0.47% of venture capital funding went to female-founded startups in 2023.
So is there much demand for the services that you're looking to provide?
There's a huge amount of demand and really a massive untapped market opportunity. Crunchbase estimated that by 2027, the global market for women's health would be $1.186 trillion US, and chronic diseases comprises the largest part of that at $218 billion. Today, fewer than 1% of women's health technology startups are building for emerging markets, so the Middle East, Africa, and South Asia specifically, which means that there is a blank slate. We know that in the context of kind of investment, outsized returns are possible when you invest where nobody is looking. And today, it's a fact that very few people still are looking at the health technology space and at women's health in particular.
Well, in terms of health technology, you do have an R&D unit as well. Can you talk to us about some of the things that you're working on there?
Yeah, so we actually unofficially inaugurated the first Women's Health Research and Development Institute in the Middle East in partnership with Princess Noor University last October. Today we have 17 research projects that are pipelined or in progress across 3 key verticals. So we're doing some population health studies, for example, looking at the prevalence of iron-deficient anemia in 1,000 women in Saudi. We are doing local clinical research and studies on novel women's health technologies and therapeutics that have been developed in other parts of the world. And we're also looking to start developing our own novel technologies and therapeutics that don't exist anywhere but have applicability for women globally.
You having any difficulties recruiting staff?
We are having very few difficulties recruiting staff. I mean, the GCC comprises one of the most significant talent pools in the world, particularly if you look at the female talent pool. And this has been evident in the significant uptake in women who are founding businesses. For example, a couple of years ago, I think in 2022, more business licenses, new business licenses were taken by women in Saudi, 165,000 in total, than in the whole of Europe. And Saudi now ranks second only to Ecuador on a global scale in terms of the percentage of businesses that are owned by women.
All right, Sophie Smith, founder of Nabta Health, thanks so much for joining us today. And coming up, according to the World Bank, the advancement of women at work could boost global economic output by 1/5. We'll discuss that next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Paul Allen. According to consultants McKinsey, women generate on average 37% of global GDP. But World Bank estimates suggest the advancement of women at work could boost global economic output by 1/5. And those projections are highlighted in a report by the Mastercard Economics Institute. And Mastercard's chief economist for EEMEA, Khatija Haque, joins us now. So, Khatija, I just wonder if you can start by describing for us some of the highlights of your study and tell us about some of the barriers that are encountered by female entrepreneurs, particularly in Gulf countries.
So we've seen really since the pandemic a really sharp rebound in terms of women's participation in the workforce in OECD countries. It's actually above pre-pandemic levels now, which is a contrast to male labor force participation, which is still just about returning to pre-pandemic levels. In the GCC as well, we've seen an increase, particularly in Saudi Arabia, where there was a number of social and labor market reforms that have encouraged women to enter the workforce and to participate in the economy in a more meaningful way. I think your previous guest alluded to the rise in the number of businesses led by women in Saudi Arabia. We're seeing also a very sharp increase in their participation in the formal labor market, so as employees as well, and also as investors. So we are seeing, this new force really coming into play in the GCC, and particularly in Saudi Arabia, where women are starting to play a bigger role in the economy, but also able then to spend more. They have a higher disposable income. They're potentially contributing to the rise in double income households. And this really presents an opportunity for businesses in the region who can understand how women make their decisions about spending and investing, and really tap into that new market.
Well, I understand there's been a 50% growth in female-led businesses in the region between 2020 and 2023. But to what degree is that coming off a low base, and how much more room for growth is there?
It's absolutely coming off a low base. So I think pre-2017, women were quite restricted in terms of what the sectors that they could work in, and even in terms of things like opening bank accounts, etc., in the kingdom. All of that's now changed, and so it's really unleashed a latent population to more actively participate in the economy. So when we look at the overall labor force participation rate in Saudi Arabia, it's now up to about 34%, which is a significant increase from 20% in 2017, but it's still quite a lot lower than the global average. And so in terms of the room to run, there is significant potential for this trend to continue, for more women to be pulled into the workforce and continue also to start their own businesses.
Yeah, what types of businesses are female entrepreneurs in Gulf countries typically starting, and how successful are they?
So the survey that Mastercard has done on entrepreneurship, which was released also this week, suggests that the industries that are most popular for women entrepreneurs are around food and beverage, as well as online sales, for people who are starting perhaps in addition to a formal sector job, they're looking at things like freelancing, consulting services, tutoring, those sorts of services industries. But I think the potential for e-commerce in the Middle East is another factor that is going to potentially drive growth in that small and mid-sized business segment, because we are seeing very rapid growth in e-commerce in the region. So that lends itself well to businesses that are looking to sell products online.
All right, Khatija Haque, Mastercard Chief Economist, EEMEA, thank you so much for joining us today. Let's take a look at some of the other stories that we're following. Bloomberg has learned that Goldman Sachs is pushing managers to move from more expensive office locations. Dubbed informally by some as Project Voyage, the aim is to drive down costs and tap a pipeline of talent emerging in cheaper regions. The bank's Dallas hub has already grown into one of its largest operations in the world, while staffing at the New York headquarters has stagnated. Other growing Goldman locations include the UK's Birmingham and Bengaluru in India. President Trump says he'll probably extend the deadline for the sale of TikTok if a deal is not reached by April the 5th. Trump had offered the app's Chinese parent company ByteDance a 75-day reprieve from the bipartisan law that had set a deadline back in January to sell its US business. However, it's not clear if the president could legally offer a significant additional extension without a deal. Coming up, Mozambique's economic woes continue over unrest in the country. We'll have details of that next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Paul Allen. Tensions are high in Mozambique after police fired on a key opposition leader's convoy. And this came just hours before President Daniel Chapo signed a plan with other political leaders to end months of unrest. More than 350 people have died in violence following the presidential elections in October. Bloomberg's Ondero Oganga joins us now from Kigali, Rwanda. So, Ondero, how far-reaching are the implications of the political volatility in Mozambique on the people and the economy?
Hi, Paul. So the economy recorded the largest contraction in at least 7 years in the fourth quarter of 2024, where GDP grew by 4.9%. And this dragged the annual growth to about 1.9%. And this is the worst outcome since 2020. And even though GDP is expected to rebound to about 3% in 2025 and inflation stabilizing at about 7%, the government is still counting its losses from the protests at $644 million. And if I take you back, the businesses had to shut down. There was looting. Some were burnt down. The road border with South Africa was closed. The port at some point was closed, and some mines were forced to declare force majeure. And even though the level of tension is not as high as it was during the election season, there's still pockets of volatility here and there. People are back in the streets protesting high cost of living because they're unable to put food on the table. And the government is trying to ease this tension. They've exempted basic goods from VAT, but Bloomberg Africa economist Yvonne Mhango says that's all they can do because concessions erode government revenue and also go against and counter some of the targets that they have within their IMF program.
So what does this mean for their IMF program and the general fiscal outlook?
Well, Paul, Mozambique was having problems meeting its IMF targets even before this election season and the aftermath of it came to pass. If we go back to September, there was a penultimate review that was expected to unlock $60 million in revenue that did not happen. And a similar payment is scheduled for the 15th of March. The African economist at Bloomberg says that she is expecting that Mozambique will continue having conversations with IMF. They're looking to unlock $120 million in terms of financing, but they'll have to adjust their targets to reflect the current situation of the economy. The African strategist at Rand Merchant Bank also says that IMF is likely to continue working with Mozambique because, as they term it, the current foreign exchange liquidity constraints call for more financing. This is going to be a capital-intensive year for Mozambique. Debt servicing cost $1.7 billion. They have an $81 million coupon maturing this year on their $900 million Eurobond. And S&P says that they are considering swapping their local currency bond for longer maturities.
All right, Bloomberg's Ondera Oganga in Kigali, thank you. The IMF says Senegal needs to take steps to correct and remedy the misreporting of debt revealed by a recent audit before qualifying for a new assistance program. The international lender's $1.8 billion program, which was agreed in 2023, is currently on hold after Senegal's president asked for an audit of state finances under the previous government. Well, still to come on Horizons, Eugenia Victorino from SEB joins us with her market outlook. Also, Deutsche Bank's Danelee Masia on South Africa's GDP print. I'm Paul Allen in Sydney. Stay with us. Jennifer Zabasaja is going to take the reins from Johannesburg. This is Bloomberg.
This is Horizons Middle East and Africa. Our top stories this morning. Another day, another tariff rollback. President Trump pauses levies on all Canadian and Mexican goods compliant with the USMCA trade deal, making 40 to 50% of imports now exempt. Stocks fall in Asia as investors navigate the uncertainty. Almost unanimous, 26 EU nations back a declaration of support for Ukraine, pledging continued aid and security guarantees. Hungary's Viktor Orban, though, refuses to sign. Plus, Bitcoin drops after the White House crypto czar says the U.S. government won't use taxpayer money to fund its strategic stockpile. Good morning to you. It is just gone past 9 a.m. across the Emirates, 7 a.m. here in South Africa. I'm Jennifer Zabasaja in Johannesburg. Welcome to Horizons Middle East and Africa. Welcome to Friday. And what a week it has been for markets, whipsawed yet again amid those ongoing trade tensions. There is, of course, concern and really focus on geopolitical developments. And then what is the path ahead for inflation still really overriding a lot of the markets? So let's just take a look at where markets are positioned ahead of the trading day. We should note it's also a jobs day in the U.S. So, of course, that is another focus for investors today. Right now, if we just take a look at S&P futures up just about 0.3%, but significant, though, because what we saw on Thursday was a lot of whipsawing for U.S. equity indices, that coming as we do continue to see these on again, off again tariffs for the markets. But after hours, we did get some upbeat reporting from Broadcom, helping to lift tech, which was one of the hardest hit across the day on Thursday. Bitcoin right now down more than 2%, 2.4% there. We mentioned how the U.S. did, or the White House, did make that announcement about the strategic crypto reserve, apparently underwhelming investors as it stands. We are seeing the dollar, though, on course for its biggest weekly drop in more than 2 years. That helping to lift some emerging market assets. Though right now, if we just take a look at the South African rand against the dollar, it's about 18.13 there. And finally, gold down almost 0.2% there. We are seeing gold, though, on track for a weekly gain as a lot of this uncertainty is seeing more and more traders flock to safe havens. Let's just take a look at another asset that we're paying close attention to. to, and that is, of course, oil. We're seeing Brent actually set for the biggest weekly decline since October. A lot of this is due to this uncertainty around what do trade tariffs look like, especially when it comes to major partners. If we take a look at Brent crude right now, it is trading at just about $69.47 a barrel there. Let's check in, though, on how markets in Asia are faring. Avril Hong is standing by in our Singapore studio with more on that. Avril, what are you watching?
Yeah, Jen, Asia stocks are down today. It's this lack of long-term clarity on U.S. trade policy, right? So the region's benchmark is underwater, even though it's headed for weekly gains. And today, the Nikkei is leading declines, and the losses there are being exacerbated by yen strength. We're seeing dollar-yen below the 148 handle. Of course, this is against the backdrop of the largest labor union in the country asking for the largest wage hike since 1993. On a day like this, really interesting to see how Chinese, or should I say Hong Kong stocks, are managing outperformance. And there seems to be enough momentum in tech to keep the party going. Hang Seng Tech headed for a third session of gains. We also have our MLive colleague Mary Nicola saying that, you know, when you look at the valuations for Hang Seng versus the CSI 300, Hang Seng's at a discount. So maybe that could also fuel further outperformance in the Hong Kong benchmark.
Thanks so much. Avril Hong in Singapore for us. We'll check back in with you in just a bit. Let's pivot back to the U.S., though. President Trump is pausing tariffs on Mexican and Canadian goods covered by the North American Trade Agreement known as USMCA until April 2nd. That's also when he's expected to unveil plans for global reciprocal duties.
Most of the tariffs go in April the 2nd. Right now we have some temporary ones and small ones on relatively small, although it's a lot of money, having to do with Mexico and Canada. But the predominant tariffs will go, they'll be reciprocal in nature.
For more, let's bring in Bloomberg's Dan Tenkate. So, Dan, on again, off again. Why did we see this shift from the president now coming Thursday?
Well, he's threatened these tariffs since November, right after he won the election. He gave them a 1-month reprieve before when he put tariffs on China. He went ahead with them this time, but then backed off somewhat. Obviously, the markets probably paid a big deal. Trump said he was not paying attention to them. We do know that his administration and certain people within the administration are very much paying attention to the markets. And there is this push-pull within the administration. Trump did say he is going to go ahead. There's no more reprieves after this one. It's only a short-term deal. So, you know, all eyes now on April 2, and we have several more deadlines ahead of them for various tariffs to come into effect. So markets and the world really are still going to be whipsawed by tariff concerns for the foreseeable future.
Dan, how much did conversations between Sheinbaum in Mexico and also Trudeau in Canada potentially play into this calculus by the White House?
Yeah, quite a bit. I mean, you know with Trump that personal relationships matter a lot. And we've seen that with the Mexican president. He appears to have quite an admiration for her. She's also said that she was treated with a lot of respect. Her opponents on the campaign trail had called her the Ice Queen before. You know, this sort of steady demeanor is paying dividends now in dealing with Trump, it seems. And with Justin Trudeau, you remember he was one of the first people to head to Mar-a-Lago to try and talk to Trump. He was being seen as really rushing over there, trying to charm him right off the bat. Trump, you know, might have seen that as a sign of weakness, but now we've seen a completely different tack from Trudeau, acting very tough. Either way, there doesn't seem much of a rapport between the two, and this goes back to Trump's first term in office, where they didn't seem to get along very well then. So in some ways, the personal relationships matter quite a bit, but at the same time, Trump's going to proceed no matter what with what he wants to do.
Right, we certainly know that. Bloomberg's Asia EcoGov executive editor Dan Tenkate. Dan, thanks so much for joining us. So let's dig into more of the market reaction from a lot of the whipsawing we've been seeing. Joining us is Eugenia Victorino, the head of Asia strategy at SEB. Eugenia, thanks so much for joining us. Dan just said we're likely to see more of the volatility considering the tariff stance where we're at right now. How are you navigating this current moment right now? How are you thinking about tariffs and the path ahead?
Well, at this point, the market is already getting tired with all these U-turns. So the market is not really pricing it in as much as it used to in 2018. Because at this point, there seems to be no geography or no trading partner that seems to be immune to these tariffs. So why not just, there's no reason to actually take on a big position. Having said that, we have another narrative that is actually dominating the market, and that's actually likely to be a structural narrative. And I'm talking about the European defense plans in the coming years. So, as I said, it's a coming year situation, but that's not going to prevent the market from trying to price it right now.
Does that mean, Eugenia, you take a more strategic position then in Europe? And are you of the mindset potentially we'll see more bullishness then from the euro?
I would think so, because as long as you have the market trying to price in bigger fiscal spending, that would actually mean that bond yields in Europe will continue to go up. It may not necessarily make as much of a dramatic move as we had seen this week, but it's not likely to see, we are not likely to see that European yields will go down too much from here, even if the ECB is still willing to cut. Meanwhile, the Fed is already already in a hard place, because right now the sentiment in the U.S. is already turning lower. Meanwhile, the real activity has yet to show any weakness. Tonight, we will be seeing the NFP. Although the median expectation is 160,000 jobs, I think considering the market pricing, it's already expecting a weak NFP number from here.
Eugenia, there's also the narrative playing out in China. Of course, we had the meeting this week where China outlined a lot of their policy proposals moving forward. Has that changed your strategy as it pertains to Asia and where you're allocating your assets?
So I've always been of the view that for the Chinese, the U.S. is not the only game in town. And we can continue to see that with the trade numbers. So while there has been some disappointment in today's trade numbers, but in reality, China's trade is actually becoming more and more resilient against U.S. tariffs. Having said that, dollar CNH is very, very resilient, and it's not actually going up as much as I had expected. But now I'm looking at the renminbi index, because even though it is not depreciating against the dollar, it is actually depreciating quite substantially against the euro, the yen. And that is why, in my view, the preferred trade is actually to go long yen, yuan from here. And actually, the trade or the target price right now could actually be around 5.1 within the next 3 months.
Why are we seeing, Eugenia, though, Asian equities then tracking lower with what we're seeing in the U.S., if you are saying that they are a little bit split from one another?
Well, at the end of the day, we are seeing very uncertain external policy. So as long as you have uncertainty in the external environment, whether or not the tariffs are actually in place, it's adding friction to the business environment. And that's also leading to delays in investments in Asia. Now, if you look at the Chinese equities, it is only the Hong Kong tech index that is really rallying at this point. Meanwhile, the other Asian economies are still very much exposed to the U.S., except that they can't really react as much because it's just too uncertain.
Yeah, Eugenia Victorino speaking there across the globe with us, head of Asia strategy at SEB. Eugenia, always great to get your insights on. Thank you so much for joining us. Now, still ahead, find out why Deutsche Bank calls South Africa's growth performance, quote, disappointing. But up next, Ukraine and U.S. officials will meet in Saudi Arabia next week to discuss a ceasefire in Russia's war. The details on that next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. EU leaders have backed a new military spending plan at the Ukraine summit after decades of hesitation. This is after U.S. President Trump paused military aid to Ukraine in their war against Russia. Meanwhile, the U.S. has confirmed that officials will meet with their Ukrainian counterparts in Saudi Arabia on Monday.
I think it'll be a good meeting. I really do believe that. Hopefully that'll be a good signal to the Russians, because they have been proactive, too, in wanting to get something done here. And I think that's what the president, that's who he is. He's a peace through strength president. The best wars are the wars that never have to get fought. And so if we can solve this and not fight anymore and save lives, that's the aim of President Trump.
Joining me now is Bloomberg's Russia economy and government editor. That's Greg Sullivan. Greg, before we get the reaction from the U.S., let's just start with what we did see from European leaders on Thursday. Ursula von der Leyen called it a watershed moment. Talk about the significance of these nations coming together and agreeing to this.
Well, Europe has really been struggling to come up with a response to Trump. Obviously, Trump has been moving fast to try and get a ceasefire agreement, but Europe has worried that that would be at the expense of their own security concerns. So they've really been trying to align and get a united front both against Russia and Trump. Now, of course, the near unanimous decision that we saw yesterday was not quite all together because, of course, Hungary still remains the most pro-Russian European country. There is, of course, Viktor Orban, who has stood in the way of this near unanimous agreement, and that has really thrown up a lot of challenges for Europe in coming up with this united front. Still, we've seen leadership from the likes of French President Emmanuel Macron and the UK's Keir Starmer as they've tried to initiate discussions on what could potentially be a security guarantee for Ukraine in the case that a ceasefire deal is eventually reached.
So then if we are to see these leaders meeting next week in Saudi Arabia, what is the likelihood we'll actually see movement on a ceasefire? Because it is still a concern about not having Russia at the table. What does this mean for next week?
Well, of course, this is a clear step. Obviously, the White House meeting that Zelensky was at last week was pretty disastrous for him. It didn't go very well. Clearly, there's not a lot of warm relations between Zelensky and Trump, but it is notable that there is apparently still engagement between Ukraine and the U.S. Ukraine signaling that they are still willing to sign this minerals deal that Trump clearly wants, and that they're still talking. But for any kind of ceasefire deal to happen, there does need to be both belligerents at the table. Russia, clearly the aggressor here, would have to come to the table. And so far, they haven't given any signals that they're willing to make significant concessions or that really ending the fighting is in their interest. They are making slow, albeit costly gains on the battlefield. That they see that as strengthening their hand at any eventual negotiating table. But they will have to eventually come to the table if there is going to be a ceasefire. Nonetheless, it is significant that Ukraine is engaging the U.S. at this moment.
Right. We'll watch how that meeting goes. Bloomberg's Russia EcoGov editor Greg Sullivan there in Dubai for us. Greg, thanks so much. Now, coming up, Israel has changed its defense policy after the Hamas attack in October of 2023. The details on that next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Israel says it has changed its defense policy after the Hamas attack in October of 2023. Under the new policy, military deterrence now outweighs assessments of enemy capability and intent. Joining us now is Bloomberg's Dan Williams. He's in Jerusalem for us. So, Dan, talk to us about Israel's new defense policy and why exactly we're getting a lot of these details right now.
Well, good morning. Today marks exactly 17 months since this war began. And while it's largely on pause, thanks to the Gaza ceasefire, it's certainly not over. Israel making very assertive efforts to ensure that what began this war, the Hamas attack,
I think we've lost Dan for the moment. So we were just speaking to Dan Williams there in Jerusalem about the new defense policy by Israel, but we'll get more from him in just a bit. Let's just get you a few other stories that we're following this morning. Dozens of people have been killed in Syria after armed men affiliated with the previous regime carried out surprise attacks on the port city of Latakia and other Mediterranean areas. The state-run news agency says the pre-planned offensive singled out multiple security sites in the area, damaging government premises as well as public and private property. 48 people are reported to have been killed. The UK has removed the Syrian Central Bank and 23 other entities from a list of sanctioned institutions, a recognition of the country's new administration. The majority of those listed are banks and energy companies, though flagship carrier Syrian Air is also included. Assets will no longer be frozen and trading with them is now permitted. Amid Washington's back and forth on tariffs, Bank of America CEO Brian Moynihan says he remains optimistic about the overall business environment. He spoke with us exclusively about how they're navigating the impact of President Trump's policies. Take a listen.
Well, I think clearly on the business side, you after the election, you had businesses very enthusiastic about the lower regulatory burden they'd have, the ability to get deals done, and you went from conversations last summer, which were sort of interesting conversations with the boards. Our teammates tell me they go in and they talk and they'd show them these deals and they'd say that makes sense, but it may be hard to get it done now. To get in here and let's talk about these deals. The President Trump's administration has made it clear they're trying to get some things done, which may cause some short-term, sort of lack of understanding. That affects the business community, but they're saying in the end of the day, and the President said in a speech the other day, we may have some short-term disruption to get to the long-term goal of downsizing government, downsizing regulation, et cetera. And I think the businesses now are sort of saying, "Ooh, I've got to figure that answer out." And that's fine because it's what it feels like forever, a month or two or three. But meanwhile, on the consumer side, you're not seeing any change in activity despite what they're saying, which is interesting.
Tell us a little bit about that, because in your last earnings call in January, and that was before the inauguration of President Trump, you were saying that consumers were still spending more than last year. Is that still the case?
So if this is sort of the dichotomy of what a consumer says they're thinking about versus what they actually do. So if you read the information of the last month or so, consumer confidence has come down and they're worried about inflation going up and all that. That's sort of what they say they're going to do. What they really are doing, in the month of February, they spent 6% more money out of our accounts into the economy than they did last February. And year to date, it's about 6.5%. You compare that to the fourth quarter, it was about 4.5%. We felt pretty good about that. So the consumer is still spending. And by the way, if you look at what they spent on food, basically flat in February. So despite the discussion about egg prices and things, the actual total expenditure is about flat. Services, travel, entertainment, growing, and that helps drive jobs, because all spending by consumers drives jobs, but the ones that are service-oriented and the entertainment require a lot of people's services.
Aren't other policies from the administration, though, a little bit more disruptive when it comes to, say, immigration and hiring for these small and medium-sized businesses?
Well, if you go to small and medium-sized businesses, they've been facing two issues. One is the real cost of money went up a lot for them because they borrow on lines of credit, short-term lines of credit, and so they have to make sure when you're talking about you have SOFR at 4.5% or whatever plus their spread. That was SOFR at 50 basis points plus their spread. That was a big change in rates. So they had to always be more careful. When you saw them kind of conservatively handle their lines of credit usage and stuff, then the election happens and they feel really good about the regulatory. But they started noticing they weren't be able to hire as easily and stuff. And so they're worried about where people think they're worried about inflation, they're actually right now a little bit more worried about getting employees and running the businesses. And I think as these policies settle in, you'll see them settle in. But they were over-regulated. All companies were, but the small, medium-sized businesses felt all the labor regulation stuff. We have thousands of people can deal with it. They don't. And so if you're running your own business, and they feel good about that, but it's offset by let's get a set of rules set and then we can go.
Bank of America Chairman and CEO Brian Moynihan speaking exclusively with the Asia Trade co-anchor, that's Sherry On. Now, coming up, Mozambique's economic woes continue over unrest in the country. Details up next. This is Bloomberg. This is Horizons Middle East and Africa. Our top stories this morning. Another day, another tariff rollback. President Trump pauses levies on all Canadian and Mexican goods compliant with the USMCA trade deal, making 40 to 50% of imports now exempt. Stocks fall in Asia, though, as investors navigate the uncertainty. Almost unanimous, 26 EU nations back a declaration of support for Ukraine, pledging continued aid and security guarantees. Hungary's Viktor Orban, though, refuses to sign. Plus, Bitcoin drops after the White House crypto czar says the U.S. government won't use taxpayer money to fund its strategic stockpile. It's just gone past 9:30 a.m. across the Emirates, 7:30 a.m. here in South Africa. I'm Jennifer Zabasaja in Johannesburg. Welcome to Horizons Middle East and Africa. And Friday, of course, it is Jobs Day in the U.S., but still, markets are navigating a lot of the uncertainty that is coming from the White House as it pertains to trade tariff policy and also geopolitical developments. But let's just take a look at where the markets are positioned ahead of the trading day. As we can see, U.S. equity futures tracking higher right now, up at the S&P future index, up just almost 0.3% there. But we should note we saw a lot of whipsawing on Thursday as we saw the on-again, off-again tariffs hitting the markets. Although in post hours, we actually saw a boost from upbeat forecasts from Broadcom, helping to lift tech across the board that was pretty bruised on Thursday. So right now, S&P futures looking higher. Sticking with news from the White House, Bitcoin seeing a lot of the price action from Bitcoin for Bitcoins, is coming from the White House right now, down more than 1.8% there. And that's coming after details of this U.S. Strategic Reserve potentially underwhelming investors. We are awaiting a meeting, though, that's happening later today at the White House with a number of crypto executives. Potentially we'll get some more insight into what that looks like. The dollar, though, on course for its biggest weekly drop in more than 2 years, amid a lot of speculation and concern about this U.S. growth momentum, that helping to potentially lift some other risk-related assets and currencies. Right now, we have the Rand up there, a little bit unchanged right now as it looks, but right now at 18.13 there. And gold also unchanged as it stands right now, but on track for a weekly gain, again, as uncertainty sees more and more traders seeking safe havens. And let's just finish on Brent, because unlike gold, Brent is actually set for the biggest weekly decline since October. On again, off again tariffs against major partners, a concern for Brent as it stands right now. But right now, the price is just about $69.56 there a barrel. Now, let's pivot back to Asia. Chinese Foreign Minister Wang Yi is presenting the country as a force for stability in a changing and turbulent world, vowing to defend global fairness and world peace.
New China stands firm on the side of international justice and resolutely opposes power politics and hegemony. History should move forward, not backward. A big country should honor its international obligations and fulfill its due responsibilities. It should not put selfish interests before principles, still less wield its power to bully the weak.
Let's bring in Bloomberg's chief North Asia correspondent, Stephen Angle, for us. So, Stephen, give us some more insight into what we did hear over the past few days from these leaders.
Yeah, I was in that room there with Wang Yi, and let's face it, he is the foreign minister, and oftentimes he has the sharpest tongue among many of the government heads in China. He says what he thinks, and he can kind of throw some barbs out there, and he was not short of them today. There was not a lot of new territory there. He talked about some of the same old messaging that China has rolled out since Trump has returned to the White House. And again, it's trying to portray China as being, dare I say, the adult in the room when it comes to geopolitical tensions, and not necessarily, well, on the one hand, you know, China wants to engage with the Trump administration, but what we've seen is not much of a success in getting a conversation between Xi Jinping and Donald Trump to try and mitigate necessarily this trade action. That's why we saw earlier this week the Trump administration doubling down on the tariffs from 10% to 20%. Wang Yi did talk a lot about the fentanyl issue, which is at the core of, obviously, of these 20% Trump tariffs. He essentially said they will take resolute action. They do take resolute action against drug trafficking in China, and that China has worked with the U.S. on this issue. Then the barbs came out a bit. He slammed America's quote-unquote two-faced acts and said fentanyl in the U.S. is a problem that needs to be addressed by the United States itself, and he vowed continued countermeasures against any action coming from the Trump administration with additional tariffs in response to what Wang Yi said, the arbitrary actions of the United States. So again, not a lot of new material coming from Wang Yi, but a similar messaging, but with a little bit more of a knife's edge to them.
Knife's edge. I was going to say spice, Stephen. How do we think about, though, some of the data that we did get from China earlier today? How does that factor into what this could potentially look like between these nations moving forward?
Sorry, I missed the critical part of that question. Were you asking about you know, their appeal for dialogue with the United States? If so, they do clearly want to be able to have negotiations, and they feel that is the best way to resolve differences rather than acting unilaterally. That's something that came up quite often. Also, Wang Yi mentioned twice during this more than hour-long, it was actually an hour-and-a-half long press conference, he talked about how the rest of the world does not want to resort back to the law of the jungle, a not so veiled reference to the United States and unilateralism and protectionism that China believes the Trump administration is engaging in right now. So they do want to talk. China is open to having fair, mutually respectable discussions, but not the way the dialogue is going now.
All right. Fascinating press conference there. Bloomberg's Stephen Engel, always great to have you reporting on. Stephen, thanks so much for joining us. Appreciate it. Let's move back to the region here. Tensions are high in Mozambique after police fired on a key opposition leader's convoy. This came just hours before President Daniel Chapo signed a plan with other political leaders to end months of unrest. More than 350 people have died in violence following the presidential elections in October. Bloomberg's Ndiro Oganga has been following this story from Kigali and is joining us now. So, Ndiro, how far-reaching are the implications of political volatility in Mozambique on the people and also on the economy? This has carried on for quite some time now.
Absolutely, Jen. And we've seen the economy now register the largest contraction in at least 7 years in the fourth quarter of 2024, where GDP shrank to 4.9%, dragging down the annual growth to about 1.9%, which is the worst outcome since 2020. And even though growth in 2025 is expected to rebound to about 3% and inflation stabilizing at about 7%, the country is still counting the losses from those protests, currently at $644 million. And if I take you back there, businesses had to shut down, the road border with South Africa was closed, ports were closed, and also some mines had to declare force majeure. And even though the level of tension is not as high as it was during the election season, there's still pockets of volatility here and there. People are back in the streets, they're protesting high cost of living. They cannot afford to put food on the table, and to try and calm this tension, the government has exempted some basic goods from VAT, and Bloomberg Africa economist Yvonne Mhango says this is the best that it's going to get because concessions take up government revenue, and it also counters some of the targets and the measures that they agreed with the IMF.
And you mentioned the IMF and Ndiro. There was a staff visit to Mozambique by the IMF. What does this mean for that program and the country's fiscal outlook?
Well, Mozambique will be looking to extend its IMF program. They'll be seeking about 120 million in financing, but also economists say that they'll have to adjust their targets to reflect the current state of their economy. Africa Strategist at Rand Merchant Bank also sees the IMF open to continuing partnering with Mozambique because they say that the current foreign exchange liquidity constraints call for more financing for that country. This is a very capital-intensive year for them. Debt servicing costs are about to hit $1.7 billion, half of which is going to external creditors. And they also need to raise about $80 million for a coupon on the $900 million Eurobond that is maturing in 2031. And S&P says that they're also going to be swapping their local debt currency for longer maturity that is due this year.
Bloomberg's Ndiro Ganga in Kigali. Ndiro, thanks so much for joining us. Appreciate it. Now, for a look at some of the other stories we're following this morning. The IMF says Senegal needs to take steps to correct and remedy the misreporting of debt revealed by a recent audit before qualifying for a new assistance program. The international lender's $1.8 billion program, agreed to in 2023, is currently on hold after Senegal's president asked for an audit of state finances under the previous government. The UK's climate envoy says a $9.3 billion climate deal rich nation struck with South Africa to help it transition to clean forms of energy will forge ahead despite the withdrawal of the U.S. The U.S. had planned to contribute about $1 billion in commercial loans to the Just Energy Transition Partnership. Similar deals have been struck with Indonesia and Vietnam. Now, coming up, South Africa grows at its slowest pace since the pandemic. Details on that with Deutsche Bank next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. South Africa's GDP grew 0.6% in 2024, its slowest pace since the pandemic. Only 3 out of 10 sectors contributed to the growth last year, including finance, personal services, and electricity, gas, and water. Joining us now is Danelee Masia, the Deutsche Bank chief economist for South Africa and Sub-Saharan Africa. Danelee, always great to get you on the show. Let's just talk about what we did get in 2024, and what does that mean for 2025 based on your outlook?
Thanks, Jennifer. Yes, it was a slight disappointment, actually. We all had hopes for a recovery in a year with very little load shedding, in fact. I think the main issue for me is at 0.6% of the economy growing slower than 2023 when we had the worst year of load shedding. You know, it really came as a massive surprise. For us, I guess what is an important takeaway is that South Africa's growth has become so synchronized to Europe. And so without a very strong external backdrop, you can see it in the PMIs, for example, we've actually had growth really relapse despite the fact that we've had all the electricity supply. Consumers are making a recovery. The private sector in the fourth quarter started coming out of that recession of capex spending. So looking ahead at 2025, we are quite hopeful that we can get to 1.7%, but we're going to have to sustain this momentum and hopefully with a backing that we get more growth throughout the sectors, so broader based.
Does the changing dynamics then in Europe potentially then mean stronger for South Africa? Is that what you're saying essentially?
So we are quite excited given this tectonic shift that has been announced in Germany. The fiscal impulse over the next 3 years is going to be quite substantial. So we're measuring something like a 3.4% boost to German economic growth simply through the fiscal impulse. And given the fact that there is an infrastructure spend in there, this is going to help South Africa because it's a very big export market for us. And so we get excited about this as another backstop given what is going on in the States and then also with China.
Yeah. What does this mean then for the South African Reserve Bank? About a week ago, I was speaking to Governor Lesotho Kganyago. That was a completely different tariff stance than we're at right now. How do you think he's calculating all of this right now?
I guess they really remain worried about two things, and that is the knock-on of these tariff wars. One cannot quite predict what Trump is going to do next, and he seems to be taking a bit of a backseat. But at some stage, if this doesn't go through, then maybe we can talk South Africa more clearly. But at this point in time, I think they do worry about a multiple level of shocks. Now you're also having fiscal globally going up, and I think the Reserve Bank really do think about these things. It's a balancing act for us. We think South Africa's weak growth, the now strong currency, oil prices moving down might very well start putting that rate cut discussion back on the table.
And what does that mean then for the rand? We're taking a look there at the dollar rand right now. Could we see continued strength then for the rand? Is that your expectation?
So it's a little bit difficult. Things are very volatile, as you say. Every day we are hit with new headlines, and it's really tough to say. But I think in this environment, all boats will lift with the tide. I guess the China backdrop and the European backdrop certainly does help. And the better it is for South Africa from a commodity perspective, I guess that is going to lift the currency. I also think that our concerns previously that the dollar could go to parity around, second quarter of this year looks much less likely now. And so it takes, I think, heat off the rand. We probably would have seen the currency closer to 19, maybe even weaker. So in this backdrop, it's a lot better for us.
And we're seeing 18.13 about right now for the rand. Danelee, when we talk about, all eyes are on the budget that is happening next week, the delayed budget, right? What could the finance minister then present that would be supportive to this environment that South Africa is in right now?
I guess it's a catch-22 for them because we have seen over the last couple of years that core services, so when we look at frontline government services on a per capita basis, it's actually been declining. And that was really due to the need for fiscal consolidation. And I think this budget really has to still maintain this level of fiscal consolidation so that we can contain the debt ratio. They don't want to borrow more, which then again suggests that we've got to go back to the drawing table. So either remove some of these additional expenses that were on the table and balance it out with not such intense tax adjustments. I guess that when you look at the growth of the economy, we are seeing it being driven mostly by high net worth individuals at this point. So there's no capacity really to absorb another tax hike. I think looking specifically into what they're going to do is a bit of a guessing game. We think that they can come up with about a third of their revenue sources, so a combination of cash and contingency reserve in plugging this new expenditure that they've wanted to put forward. But sustainability here without a long-term tax adjustment is going to be the key question, and I think that's what the markets are going to look at.
And that's a lot of the debate now. We're waiting for that budget to come March 12th. Well, we have to leave it there, but really appreciate, as always, Danelee Masia, Deutsche Bank chief economist for South Africa and Sub-Saharan Africa, joining me here in studio. Thanks so much, Danelee. Now, coming up, FirstRand Bank's profit rose 10%. We'll hear from the CEO, Mary Vilakazi, next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. FirstRand Bank's profit rose 10% as South Africa's biggest lender by market value boosted loans in its home market. I spoke with CEO Mary Vilakazi on the outlook for the country's economic growth and how the Trump administration could impact trade.
Global inflation is really the one to watch, because earlier when I spoke about South Africa being able to reduce rates because inflation has been coming down. So I think anything that is inflationary globally is going to put that under pressure. South Africa has got economic reforms that they have identified, that the government identified and is focusing on, working with the private sector. It's quite critical at this point in time that I think we see continued execution, if not accelerated execution, on reforms for energy. The transport and logistics sector is still pretty stuck. I think they're making progress, but I think they could make even further progress. The telecoms, getting skills in the country. So there's a lot, Jennifer, that I think if I look at South Africa needs to happen to make sure that our economy is growing and can become resilient. Okay, so, and when it comes to trade, I think it's important to make sure that we are able to trade with as many countries as possible. I think the US is the second largest trading partner of South Africa. There is, I think, a good place whereby there is trade agreements that can still be struck to make sure that, you know, that relationship continues. Yeah, but I think at this point in time, for me, I think the important part is really on making sure that, yeah, that South Africa does what it needs to do in its own backyard to ensure that the economy grows and becomes resilient. And in case there are shocks that come, that I think, you know, you've got a spread of trading partners and not to impact the economy significantly. But what's happening in the world, I mean, I think it's taken a lot of people by surprise. So let's see and hope for calmer minds, I think, as decisions get made over the next coming years. Because for some of the markets, I mean, on the African continent, I guess the implication can be quite dire. But I think it's an opportunity for those countries to look and see how structurally their economies can become a lot more resilient, given the resources they have.
A lot of the world is celebrating International Women's Day in just a few days. Of course, you are the first, from my understanding, female CEO of FirstRand Bank. I wonder if you think the right steps are being made to introduce and welcome more women into the C-suite in the banking industry, in the region in particular.
Look, Jennifer, I will always advocate for more. You know, I think there's, you know, that there's still very few female executives. And yet, you know, when you look at our intakes, when we look at graduates and we look at top students, you know, that grouping contains a sufficient number of women. And we know for all sorts of reasons, there'll be women that decide that this is not their choice, but they certainly cannot be so few. So I think more needs to be done. If I look at our own business and FirstRand, it is encouraging that if I look at the people likely to take over from me one day, you know, that pipeline contains women. But one has to be deliberate and I think continue to provide the sponsorship. And I think making the business understand why it matters to have diversity in an organization. So I hope to see more. I hope to see more, and I hope to see FirstRand being an organization that routinely produces women leaders.
That was part of my conversation with FirstRand CEO Mary Vilakazi, and you can see more of that, the full interview, actually on Bloomberg.com. And for more of our coverage from across the continent, don't miss our weekly Next Africa podcast. It's available on the Terminal, Apple, Spotify, and wherever you usually get your podcasts, plus our bi-weekly newsletter available on Bloomberg.com/newsletters. Now, for a quick look at some of the other stories we're following today. SpaceX has lost its second Starship rocket in less than 2 months. The projectile spun out of control before appearing to break apart during its 8th test flight. The rocket split apart as planned, but the spacecraft began tumbling and lost contact with mission control around 8 minutes into flight. Starship is key to SpaceX CEO Elon Musk's dream of sending humans and cargo to the moon and Mars. Musk posted on X calling the mishap a, quote, minor setback, saying the next ship will be ready in 4 to 6 weeks. And in other space news, Intuitive Machines says it believes its second moon lander may be in the wrong orientation, repeating a similar issue last year when it first crafted touchdown lopsided. The company says it couldn't confirm the status of the latest lander. All right, that is it for Horizons Middle East and Africa. Stick with us for Daybreak Europe. This is Bloomberg.